do you agree with the perspective that if interest rates go too high, too fast, that it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
Today, with the world feeling like it's on the brink of collapse, we'll be going over 4 key elements every investor must understand in order to prepare for the coming recession. Before we dive into the checklist, we need to go over something extremely important. Recessions lead to great opportunities. In the last 20 years, there have only been 3 of these opportunities. And the last time a 50% decline happened was way back in 2008. That was 14 years ago, making this a once in over a decade opportunity to start putting your money to work and become a future millionaire. So without any further delay, let's get into what you need to know to prepare for this life-changing opportunity. Number 1, every investor must have cash on hand ready to be allocated at a moment's notice. When the major decline happens and stocks are at bargain prices, you need to have cash on hand in order to be able to buy into them. If you have cash on hand, great. However, if you do not, or you would like to accumulate more, here are some quick things you can do. 1, reduce or eliminate eating out expenses. Postpone home upgrading projects until a later date. Find cheaper alternatives when going out with friends, dates, or kids. Unsubscribe from services you simply do not use, or maybe bundle with somebody else to split the cost. Wear a sweater in your house during winter, turn off all the lights when you're not using them, go to supermarkets that price match, download the app called Flip. For Canadians, the Real Canadian Superstore price matches and has PC points. Every 10K points is $10 off. I myself get about $120 free of groceries for 2 people per year. Don't buy that new car. You get the idea. Just save as much money as you can. The best times to buy stocks have been in these moments of a recession, but we have to be able to prepare ourselves in order to take advantage of the opportunity. Number 2, you must understand what you own and what the value is of what you own. This is very important. If you do not know what you own or its value, when the price goes down, you will panic, sell, and get frustrated that you lost money. Do not be that person that has a rare vintage car out back in the yard and sells it for $3K when it's worth $100K because they had no idea of what the value was. Leave a comment below if you would like me to do a video on how to value stocks and a specific stock you had in mind. Number 3, do not panic. The worst thing that you can do is lose your head along with everybody else. You must keep your cool and remember what you own and understand that prices going down is a good thing. But don't take my word for it. Take a look at this clip from legendary investor Peter Lynch, who ran Magellan Fund and averaged a 29.2% annual return for 13 years straight.
That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine. You're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. People tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own.
And number 4, you must act when the opportunity presents itself. For this point, I will let the greatest investor alive explain it to you.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you really gotta grab them when they come, because you're not going to get 500 great opportunities.
And with that, Toro fam, prepare and do your homework on stocks currently in your portfolio. Wait for the right moment and do not be afraid to act when the opportunity presents itself. Just do it! The stock market has never lost money for anyone in the past 100 years. Only the unprepared have, because they did not know these 4 points.